We're Emperor Metals. We have two assets, basically in Quebec, two projects. It's in the southern Abitibi. It's a Tier 1 district. What we're doing in this district is we're using AI to identify overlooked deposits and capitalize on them. So that's what we're going to go through. What are these assets? Here's my disclaimer. The only thing missing in this disclaimer is, Jeff, I'm not a rapper. I got it. Who am I? I'm a geologist, president and CEO of Emperor Metals. I have like 35 years experience in this industry. First 15 years was in exploration. Subsequent 15 years plus was in production. Spent half a decade underground, another half decade in the open pit. I worked for companies like BHP, Placer Dome, Barrick Tech. Most recently, I was chief geologist up at Detour Lake Gold. We ended up selling that to Kirkland Lake Gold, so I worked for them for a bit, and then Anigo Eagle, because they acquired that asset for the generational mine that it would become. So there was a pretty good story there. Our rock star, we're a metals group company, John Williamson. He's involved with a lot of successful companies, like 20. We're clean exits. I mean, the group has a track record for growing resource deposits, selling them to majors and mid-tier mining companies. So it's you know, a really good group to be in. He's basically the chairman of the board of the company. And we have a CFO, we have good independent directors, and awesome IR people. The district that we're in, both the properties, has a rich history of mining. It's a top Tier 1 mining district in Quebec, and it has infrastructure all around. So that's part of the story, and we'll get into that. So here's where the two properties are. So our flagship is Duquesne West. It has a historical mineral resource of 727,000 ounces of gold with an average grade of 5.42 grams per ton. When we picked this up, we liked the idea that the average thickness was 5.7 meters. So we thought, wow, this looks like a pretty good high-grade underground gold deposit. What we quickly realized when we started our inaugural drilling program in 2023, 2024, is that we were potentially sitting on a large-scale open pit over this high-grade gold deposit because the host rocks, which nobody sampled before, had gold in it as well. People only cared about high-grade gold deposits in this district. It's transforming now with the price of gold. The economics are changing. Stories like Canadian Malartic, Detour Lake Gold, Cote Lake, Greenstone, all these projects, you know, are becoming more in vogue in this high gold price environment. Our other project is Duquesne West to the south. That's an interesting story. We'll be still under purchase and sales agreement, probably be closing at the end of this month. Has 3.3 kilometers of underground workings. Has a historical mineral resource of 227,000 ounces. We think we can double it quite quickly. Both these projects, we use AI. This asset has a mining permit in place of 1,000 tons per day, so we just need to dewater it, rehab it, and get into mining on it. We'll talk about that at the end. This is the vision for Duquesne West, the property that we first talked about. Open pit over this high-grade gold deposit. You can see on the right the gold grades. So yeah, 3 grams per ton underground cutoff in this model that we're showing here. But in an open pit, we can build ounces more rapidly. You know, cutoff grades of 0.4 and higher. So our 2024 drill-in program was to expand this footprint. So this is conceptual open pit that you're seeing here. It's at $1,650 gold. So if gold's at $1,750, you're making $100 an ounce if you mine that pit as it is right now. But it doesn't include the host rock and that incremental grade that I was talking about. The dimensions, you know, 1.8 kilometers long, 800 meters wide, down to 400 meters deep. We think that we could potentially extend it out to 2.6 kilometers. These were some of the gold grades. In red is the high-grade zones that people would have sampled in the past. This is our drilling. In green is kind of the low-grade bulk tonnage that we're going to be adding. We're going to be publishing a updated mineral resource estimate early Q2 of this year, so in April. So that's exciting news flow coming. We want to break this over the million-ounce hurdle for sure and continue drilling. Deposits like this, usually 400,000 meters of drilling. We're only at 125,000 meters. You can see that first intercept, 21.7 meters of 35 grams per ton. We just put that out last week, that intercept. We had other intercepts of 10.65 meters of 3 grams or 10.8 meters of 15 grams. So really, really high-grade stuff. This is just showing an example of how we're tackling the expansion of the pit internally along strike and growing the footprint. Way out to the east, the NIP zone you can see, 16 meters of 6 grams per ton, 2.5 meters of 51 grams per ton. We drilled down dip just to see the extent, because we like the potential all around, along strike and below it. 2.5 meters, 10.3 grams per ton. This system's not going anywhere. It's right here. We need to just keep drilling and adding ounces. These are in the heart of the deposit. Like I said, the location where we're at, we see these deposits that we're talking about as satellite deposits for supplemental feed to existing infrastructure in the area. That way, we wouldn't have a huge CapEx. We wouldn't have to build a mill, wouldn't have to build a tailings dam. Quick payback period that way with CapEx runaway costs when you're building projects like this. That could cost like $500 million to $1 billion. We wouldn't have that cost. So good payback period, good rate of return, and a healthy NPV. That's why we like it. So in the heart of it, we saw 15 meters of 15 grams per ton. You can look at some of those stopes that we calculated. The rocks look exciting. It's not a pinch and swell quartz vein. It's basically replacement style, good competency. This is historical core that no one sampled before. This is how we're adding the incremental ounces to the open pit. So it's rusty. That's mineralization in there. We're getting numbers out of it. Just look at our press releases that we released this year. So that's exciting that we have all this core to sample from historical workers as well as our drone drilling to add ounces to this project. So stay tuned for our mineral resource update. Just to explain, this was a poorly understood area of the pit. It's just showing that we drilled hole 12 just recently. We published it last week. We were expecting these lenses to be 1 gram plus or minus half a gram. So the first intercept you see there, bang on what we thought in our models. Hardly any drilling, but we wanted to understand it and put that. You see how the model's breaking down there? That's because you need more drilling. So we put a hole, and we were expecting on the lower intercept 1 gram plus or minus half a gram. That's what our model was telling us, but we hit free gold in the system. So we hit 21 meters of 35 grams per ton, including an interval of 2.5 meters of 301 grams per ton. This is important because it really opens up, the opportunity to get a very good grade in this open pit environment over those lengths. And for bulk mining, it's free gold. It's randomly scattered in that interval. So yeah, it's a huge development in the story to get the ounce profile up and improve the economics of this open pit. Maybe bring that pit shell down to 1,100. That's what the visible gold looks like. Here's Lac Pelletier, other acquisition. To the west, we have Agnico Eagle's Wasamac mine. We border Agnico Eagle's property. They have 3 million ounces of gold in all categories. Currently, Lac Pelletier has a historical mineral resource of 227,000 ounces gold, but we used our AI modeling. We thought we could double it quite quickly on a path to over 1 million. It has underground workings, which you'll see in a second. Just to the east, you have Strathcona mine. The property south of us sold for $25 million, very similar to Lac Pelletier. This is what Lac Pelletier looks like. Underground mine, has 1,000 tons per day mining permit that we're going to acquire, and we'll be a near-term cash flow producer. Great exploration potential below 300 meters, 3 million ounces to the west. That's our plan, our share structure. Rob McEwen is a major shareholder in us. He has a company in the district, and he basically likes what we're doing with AI. He loves innovation. He sees what we're acquiring. We have the same strategic vision, and we align perfectly with our thoughts for the district. We're like a $14 million market cap company, and our analogs are running between 50 and $300 million market cap. So we're excited to get a 5X quickly. And if you want any more information, please stop by the booth. We'll probably be opening a financing soon. So if you want to get in, if you're an accredited investor, this is a great time to get in. We're at like 15 cents today. So I'll see you soon.